This was supposed to be a fireside chat on the subject matter, but it seems now I'm on my own. So let's make it a very interactive session on this subject matter, right? So a very brief introduction about myself. I'm Vinod Kantharia, living and working in Hong Kong. I basically hold group CFO positions and currently working as the head of Treasury, banking, and the credit risk management for an apparel industry. So by profession, I am a qualified cost accountant, certified management accountant, and a certified lean manager. So as a certified lean manager, it's my responsibility to ensure that exactly in the next 23 minutes, we end the session. But at the same time, we need to basically discuss a couple of critical points on the subject matter whereby we have a complete knowledge sharing on what neobanks is all about, whether it is really dominating the existence of the traditional banks, and what do we feel whether neobanks will take over the traditional banks in the few years to come. So I have been basically working in corporates dealing with the banks on the corporate side for the last 15 years, and I'm basically sharing my perspective of what I think about neobanks have emerged into and why I believe that neobanks cannot replace traditional banks in the coming years. Well, the concept of neobanks basically evolved maybe just a decade ago. So yes, they have disrupted the entire traditional banking industry, but again, what they have done, they have basically digitized, they have done a lot more digital transformation in terms of how the customers want to deal with the bank. So for me, neobank is anything but is basically not a bank at all, but it provides you the services which in a way you would not like to go to any physical bank, but just at the click of a button on your mobile or on your app, you are able to do the transaction. So coming back to the emergence of neobanks, yes, in the last a decade or so, they have emerged a lot. I would say in the last few years, they have exploded, especially in the COVID times, and that has changed the way we all basically want to deal with our banking system, whether it is on an individual level or at a corporate level. Now, I would just share my perspective in less than 10 minutes and then keep the discussion very open to make a very interactive session. Now, I don't have any presentation as such, but see the difference between, again, I'm just sharing my own perspective that how these neobanks are so different from the traditional banks, primarily because they don't exist physically anywhere. They are all digital. You have so many apps that in the last 10 years, we have more than 400 neobanks and over 1 billion customers. But then what next? What are they basically doing exactly to challenge the dominance of the traditional banks? Now, apart from the digital transformation, apart from having this digital journey, which basically changes so very frequently as per the customer needs, this is where they have an edge. If you basically think about any big traditional bank, they have a legacy. They have certain policies which was written maybe 30, 40, 50 years ago. They have been regulated by their own countries. They have been regulated by transactions that we do cross-border. Unlike traditional banks, neobanks have enjoyed, the soft regulations. I think we discussed the difference between soft and hard regulations yesterday. So, you really cannot compare neobanks with the traditional banks because at the end of the day, they both have different perspectives. They have the same priority to satisfy the customer needs, but how do you satisfy the customer need is something, a biggest challenging part. So when it comes to neobanks, you basically sitting over here, a couple of people I have seen doing certain transactions on certain apps, which it wouldn't have been possible if you have to really go to a traditional bank, where you have to queue up, you have to take your ticket, you have to wait for half an hour, 1 hour, and then, maybe it's a matter of 5 minutes, but then the amount of time that you spend from your house to go to a physical place and get your job done. And again, it's very uncertain that your job will be done on the same day, especially how the process is run in the traditional banks. So this is the amount of time that you save. This is the amount of time which you save, and you have more thoughts on how to reinvest your time better that can give you more productivity. So this is where neobanks have emerged largely. But again, I would say that neobanks have definitely shattered the dominance of the big banks. But again, it will take them a lot more to go ahead of them, or or to even replace them. Well, one last point before I just open up this particular discussion as part of Q&A or as part of our knowledge sharing. See, the traditional banks, what I would say is more on the securing the digital data of the customer. At the end of the day, the priority of the traditional banks is to satisfy the customer's needs, but not at the expense of sharing your digital data to anybody. In case of neobanks, yes, unfortunately, the issue is their digital data breach has been huge in the last couple of years. In fact, if we look at the claims that have been made in the cyber security industry, neobanks basically are topping the list. So it's very important that on one side, they have 1 billion plus customers, but then are we just looking at number of customers going ahead, or are we trying to scale up, or are we trying to make this industry more profitable? Making this industry more profitable, you need to have a lot of trust. That trust, when somebody is using a particular app, is 100% sure that, yes, all my data is going to be completely secure, and I or my data under any circumstances will not be breached. Whatever transactions you do, believe me or not, based on my experience, my perspective, and my interaction with various big banks over the last 15 years, at least the digital security that these traditional banks have in place, they have, based on this one important aspect, been able to rule, at least for now. So in the last 10 years, if the emergence of neobanks have gone up, we never know that in the next 10 years, what it would basically look like. So again, my perspective is, yes, neobanks have shattered the dominance of the big banks, or the traditional banks, I would say, but it will take a lot more for them to at least be near to what traditional banks have achieved in the last maybe 5, 6, 7 decades or even centuries. So again, this is just my perspective. This is just what I believe in this era of digitization, that neobanks has an edge, but again, only to some extent. So if I would basically have to ask a question to you, because you all come from industry belonging to real estate, banking, from finance, if I have to ask whether, because all these days you have been asking questions to the person who is on stage, so basically let me just ask you a question, that do you really believe that neobanks will take over traditional banks in the next 10 to 15 years? If yes, then why? Anyone? Do you actually believe that neobanks will take over the traditional banks? Either yes or no? You are absolutely right. Who else? Exactly. I completely agree. And one of the reason why you feel that they will not take over the traditional banks is it about the data security? Is it about the data breach? What do you think?
I believe neobanks will not overtake the big banks because the way that the system is created and it's operated with their strategic, with their strategy. But I do believe that we should be open for a change because, you know, if something happens again and we're not able to do things the traditional way, maybe there is a room for Neo to show us some things.
Well, okay, I agree. We should be basically keeping our minds open. We should be open to any new strategies. We should be flexible in terms of getting any new processes into the system. So my belief is, instead of being a competitor to a traditional bank, neobank can be a collaborator or a facilitator with the existing traditional banks. Why? Because so far what we have seen or heard about neobanks is about number of customer base, is about number of transactions that they have handled, whether it is in space of payments or lending or savings or checking accounts. What next? How do they scale up? How do they make themselves more profitable? One of the most important strategy that these neobanks should adopt is the banking as a service, which they should be the one who will be facing the customers. Banking as a service, they know how well to interact with the customers. They know what the customer needs is. They know how the customer has interacted, reacted, how many times the customer have filed the complaint, how many times the customer has gave them a thumbs up on all the data or all the transactions that they have done with the bank. So this entire data system, entire artificial intelligence that these neobanks have, they need to basically make the most use of it, get out of these transactional matters and go more into the relationship matter. So they need to be the face of the customer. They need to interface with the customer. They need to give more satisfaction to the customer in terms of their needs, their requirements, because the customer needs basically changes every now and then. But at the same time, they need to partner with the traditional banks where they know all the complex processes that is in place. Now again, this complex process, we can say it's a disadvantage, but I think we are blessed to be living in a more regulated world where we know for sure that these traditional banks, they have the history, they know well how to manage the entire complex system and the complex processes, although we may not like it, but at the end of the day, this is what it matters. If we are more concerned about our data, if we are more concerned about the security. So neobanks, for them to emerge further, they need to scale up, they need to be the interface of the customer, they need to collaborate with the traditional banks rather than just be a mere competitor and just increase the number of customers into the tally. You agree? Or anybody who does not agree? Yes, please. Yeah.
I believe that it's going to be very difficult for new banks to replace traditional banks, but also you need to understand that people like to deal with people. When you have a traditional bank, you can go to the bank officer, you have a loan officer, you can sit down and discuss terms and conditions for a particular investment or a particular loan or whatever. In new banks, you don't even, it's basically virtual. You have no idea who you're talking to, who you are, who to discuss certain terms or to complain. It's basically either an automated message or somebody behind a vague person. It could be somewhere else in the world where you have language barriers that could interfere. So I think, and also traditional banks are going into a transformation right now as well, because they see what neobanks are doing, and I think you see more and more services, similar facilitations of traditional banks, but by neobanks, but they have the infrastructure within the communities. The relationship bankers, let's say if you're a city in Florida, let's say in Vero Beach, you have a bank there, you have officers that live there, they know the people, you can go and know that person, and you can discuss many different things, whether it's a complaint or whether it is something new you want to do, and so on. So I think this is a very important part in doing this. And actually, I see neobanks, just like Amazon. Amazon, their original business model was basically online. But now, if you go, there are Amazon supermarkets that are popping up, because that human interaction, that ability is quite important. So they're moving actually into that space. And I've seen neobanks moving into this traditional space, because they will soon realize the importance of communities and importance of relationship bankers. So I see actually the opposite rather than and so on.
Agree. In fact, I am the one who completely agrees with you. See, we feel the importance of the traditional banks only when we are into a trouble, right? If everything goes well at the click of your mobile app, everything looks fine. But the moment you are in a problem, you don't know, to whom you should be reaching to. Again, the advantage of traditional bank is the physical presence, the interaction with the people in the bank, where you can discuss your problems. Your problems may get resolved in few days, few weeks, but at least you know to whom you are basically approaching to. You gave an example of Amazon. In fact, Alibaba is also into the same space, where it disrupted the entire online retail industry. But what is happening is still there are so many, means when I say so many, I would say, yes, hundreds and thousands and a couple of million of people still would like to feel the particular product before they buy. So I come from a fashion and apparel industry, although I'm not on the business side, but I have been hearing that how the customers buy all things online. They are so happy. But yes, that's only for a certain period of time. At the end of the day, they need to feel the touch of the product, that it's not just how it looks on them, it basically how it feels, the touch of the body that it has on the product. So this, people do realize that how important it is to touch and feel the product before you buy. The same thing happens with the neobanks. So again, neobanks need to be a collaborator with the traditional banks rather than be just a mere competitor and increase the number of customers. Yes.
Thank you. I agree. I really appreciate this direct contact, because you're just able to build trust when you have this personal contact. What I have a problem with is too big to fail. We've seen it with UBS, recently in Switzerland with CS, and of course we won't let them fail, because we would have a crisis. But who is paying it at the end? we with our taxes. With that, I'm personally having a problem. Too big to fail. Where else do you have that? If you fail with your company, that all the people around you in your country pays for it. And we have now a lot to pay in Switzerland for CS. And UBS, they stopped with some investing, and CS, they just continued, and you just could see it that they will fail. You just had to open your eyes and to see it. And that's personal a problem that I have with the too big banks.
Yes, a bigger bank has the larger process. They are basically regulated with, as I just mentioned, maybe 30, 40, 50 years, somebody has laid down the policies, and the people who are joining the banks, their job is to ensure that nobody overrules the existing policy. Whereas for neobanks, they just need to develop the software, they just need to add new data points, or they just need to upgrade the software every now and then and roll out. So the people who work in the traditional banks, their job is to protect the processes and ensure that nothing gets bypassed through the technology. Whereas in neobanks, every now and then there is an upgrade in the system, and you will see maybe not in weeks, but maybe after a couple of months, a new software or a new upgrade comes up. That's a bigger challenge. But again, does this help neobanks to basically go up, or does this basically pull down the traditional banks and they might not come up to the space of neobanks?
Okay, so I started my career as a banker. I'm here, okay. And then I moved to the technology side of the business. One thing I have seen, and I interact with most of the banks on a day-to-day basis, while the neobanks may not replace the traditional banks, but they provide a modern experience to the end customer. More and more, if you see the millennial, Gen Z, and all the new, when there is also going to be a great wealth transfer from baby boomers to millennial, these people want the experience that is similar to like social media, right? You access your portfolio, you access your bank account on your fingertips. While they cannot replace the traditional banks, and I am very much in, basically I agree with that, there has to be a human touch when it comes to our engagement and when it is related to money, right? Money is always emotive. Now, but the problem we see in most of the traditional banks, they are running on platforms that are not modernized and that are too old, or you can call it as monolithic architecture. And they are not even going in a direction to give that a modern experience. So I'll give you an example. There are 4 systems working within the bank, and each of these systems don't interact with each other. So what they do, they manually pull out the data from one of the system, they upload it in system 2, then they do the manual reconciliation. Think of the tedious process when there are millions of customers doing transaction on a daily basis. Now, that is where we always say, while the human touch is important, neobanks are threat. But having said that, traditional banks have to lay down clearly a strategy to progressively modernize.
Agree. So the traditional banks need to digitize themselves, need to upgrade, but the pace at which they will have to upgrade themselves is a big question mark, right? So for these all big traditional banks, let's say just to put down a strategy, it might take 8, 9, 10 months. And this 10 months, they might be spending a couple of millions of dollars. What if after the end of these 8, 9 months, they develop a particular software if it goes wrong? That's a big challenge that these traditional banks have. Hence, as I just mentioned, that why not these neobanks collaborate with the traditional banks? Neobanks are expert in maintaining the data. They have the entire AI at their finger point. They have the people who can develop and upgrade the software. They can act as banking as a service, as a front end, and provide all the customer service satisfaction that myself, you, and everybody here wants. And let the traditional banks deal with the hard regulations, let them deal with the processes, because they are not just dealing in one specific country. They are dealing in cross currencies, they are dealing in multiple countries, they are dealing with multiple businesses, and every business has certain restrictions and a lot of processes in line. So if neobanks and traditional banks join hands, I believe that is something we should see, that we are emerging in a banking industry, we are emerging as a success factor rather than just running into a rat race.
Yeah, only 2 things I would want to add. One is, see, while development of software used to be earlier when the banks used to go to the IT vendor, services vendor, and then they used to ask to build a system from ground up. Now, if you see, there are more and more IT product companies like Edgeworth, Intellect, then you will see more and more of these companies are coming into where they have platform off the shelf. It can be implemented real fast within 3-4 months. And that brings agility. While the progressive modernization can happen step by step, that is where most of the banks are focusing now. Now, second thing, as you mentioned, that neobanks and traditional banks have to come together. That is where I think the embedded finance is picking up. More and more banks are bringing that power or augmenting the power of some of these neobanks to offer that to their customers. Yeah, thank you.
The other thing, with new banks, also they operate under very similar rules, because if big banks are failing, they're failing from underlying processes of their investments and what they do, and even new banks have to do that. So having a small bank, or maybe somewhat with higher technologies and so on, they're also prone to failures. The difference is one, you can knock on somebody's door and talk to, and another one, there's nobody to talk to. It's just service interrupt, thank you very much, bye-bye, we're not there anymore. So I wouldn't take the premise that neobanks are not prone to failures. They are, for whatever reason, and because the underlying profit-making and money generation in banking system is very similar. The only difference is one offers a particular service, more traditional service, like that's being said, and the other one is maybe a little bit more traditional. Banking industry, in my experience, has been quite conservative industry, very traditional industry, takes a lot of time at least to implement IT projects. And what they do, and I agree with him, because they build layers upon layers. You know, anytime you have something new, they will build a layer that will extract from the older layer. Then they will build another layer and extract. And at one point in time, I was involved in this particular setup many years ago. But I think what will happen is, even if they collaborate with neobanks or new platforms, somehow they have to integrate. Okay, they still have to do that. So traditional banks are realizing this. Their path to modernization is a bit longer because they have different rules and maybe much more conservative executives that needs to really validate than you would have in a traditional neo. And eventually they will all come together, but I wouldn't go on the premise, well, it's a smaller bank that it's not going to be prone to failure, because they are just as prone to failure than big banks. The only thing, sometimes big banks have higher risk in terms of if they stretch themselves out, or they can balance that risk as well. So,
Agree. In fact, my time's up, but just one last point on what you mentioned, that at the end of the day, it's basically people. People satisfaction is what neobanks have emerged into the dominance. The layer of number of people we have in the traditional banks, you know, even to change a process, you have let's say a development stage, then it goes into the QA stage, it goes into the user acceptance stage, then it goes into the deployment stage. And then every stage has multiple layer of people. And every person under that particular stage needs to be happy, needs to tick the box, and only then the process goes ahead. So how we can improvise on this process, right from development to deployment. You know, if we are able to reduce the time, if we are able to reduce the amount that is basically spent into, and if traditional banks, if at all they do realize that they have been shaken by neobanks and they have to walk or run at a much faster pace, that is the only way for them, just to get a very high acceptance from the customers. Well, I just basically put my perspective around. Again, this was just purely based on my experience, my interaction with the corporate banks, as well as the employees who work in corporate banks and their perspective on the neobanks, which is completely contradicting. But this means that in the years to come, there is a huge chance for both neobanks and traditional banks to join hands, and yes, to ensure that whatever processes are there to implement a particular strategy, you reduce the number of people that they are into each layer, and you deploy that process ASAP to give a better customer experience and to gain the trust of the customer, which is the most important part. Yeah. Thank you. Thank you very much.